In today's video, I want to chat to you guys about the process of employing someone. My name is Andrew from SA Accounting Network, and I've been an entrepreneur since 1993, and I've been in the accounting industry since 2008. So today, I just want to unpack a little bit just the process of what you have to go through when you're employing someone. And I think there's one or two little loopholes or potholes that you guys need to be aware of, that you've got to be careful of, especially if you're a first-time employee. And that is what I want to touch on today quickly. And I just want to talk through that process. Before I jump down to my presentation, remember to give the video a like, remember to hit subscribe, and let me quickly show you guys what I've prepared for you for today. Yes, so what I'm going to talk to you quickly about is how to employ someone. So just the process, and I think one of the big questions that a lot of my clients ask, or even me myself when I went through the process of employing someone, is when is the right time to hire? So I'm just going to briefly touch on this. We obviously at some stage will go the deep dive a little bit more into this, but for now, just when to hire is if you're busy turning away work, that's obviously a clear sign that you don't have enough hands. If your customer service is suffering, if you're overwhelmed with tasks, when you need a specific expertise, remember one person can't do everything, and then obviously your finances needs to be stable as well. So I think that is just one or two things. If you tick one or two of those boxes, then you know, okay, it's time to start looking at hiring some employees. Yes, so just what the process looks like. Obviously, the first thing is you need to go through the recruitment process. First thing, you will obviously create a job description because you need to know what you need to advertise for. You'll place some advertisements and to get some CVs of potential people who you want to employ. Then after that, you will do some interviews. You will obviously do assessments and checks. You will then go through the onboarding process, and that's where you will start with the employment contracts and compliance stuff. And that is what I want to stand still on. So you'll see that if you go check on my YouTube channel, I've done some videos, some interviews with recruitment agents. So it's quite useful to work with those people because they obviously guide you through the process as well. But that is not what this video is about. I want to chat to you guys quickly just about the compliance aspect. So when you become an employer, there's basically four things that you've got to be careful for, four things that you need to be registered for, and I'm going to briefly touch on the inspections as well. So first thing is pay as you earn. We're going to unpack that a bit. UIF, unemployment fund, skills development levy, workman compensation, and then we're just going to touch briefly on labor inspections just to let you guys know what that looks like. So pay as you earn. Yes, so remember the receiver of revenue says that if you employ someone, then within 21 days, you need to register with the receiver of revenue for pay as you earn. So one misconception that a lot of people have is that if you register a company, do you think that you're only liable to become an employer once you employ somebody except for yourself? But remember, as the director of the company, there's only three ways that you can get money out of the company. The first one is if you put money into the business. If I borrowed my business 100,000 Rand as startup capital, then I'm allowed to take that money out again without having to pay tax. The second one is when you do dividends out of the company. It's a complex process because you need to have profits. After you have profits in the company, you'll pay company tax. The money that's left over after you pay company tax, from that you're allowed to withdraw dividends. And then the third way, which is the most common way, is for you as the owner of the company to take a director's salary. So if you as the owner of the company take money out of the business for personal consumption to live from, then you are classified, or the company is classified as an employer, because remember, you as the director are taking a director's salary. And because of the amount that you're taking out of the business, it puts you into this basket over here to say that you have to register for you. Pay as you earn, UIF, STL, all the stuff is then relevant to you. So even if it's only you and your company, you still need to tick this box over here if you're taking money out of the company in the forms of a salary. Yes. So the application for pay as you earn can be done via e-filing. Once your business is registered, you need to link the number to your e-filing profile in order to file returns. Then the pay as you earn returns are due on the 7th of the following month. So the pay as you earn for March, these expenses would be due by the 7th of April, or they said the last working day before the 7th. So if the 7th is on a Saturday or Sunday, you need to be filed by the Friday before the close of business. So this is a trap that I've seen, or mistake many people make, is they end up paying the pay as you earn like on a Saturday morning or on a Sunday afternoon. By Monday, when you log into that e-filing profile, SARS add a 10% penalty plus the interest. You can fight with them about the penalty, but it's always a nightmare to get those things reversed. Remember, they say that you know that you must pay as you pay as you earn before closing of the last business day before the 7th. Okay, late submissions, I said it over there. will be a result in a 10% penalty plus interest. So let's quickly look at the technical side. So pay as you earn tax tables for individuals. So remember that if you are earning a salary from R1 to basically 240,000 Rand, you've got to pay 18% tax. So that is your annual salary. So that's called 20,000 Rand per month. Then you can see those tax tables drops down or it increases. And once you go above 1.8 million Rand, you start paying 45%. So then the receiver of revenue gives you certain rebates or discount on the tax that you have to pay. So if you earn, let's say, for instance, 100,000 Rand, and you know that your tax is 18,000 Rand based on 18%, they give you a rebate of 17,235 Rand, which means it's only that little bit difference, 700 and something Rand tax that you have to pay for the year. So that is why there's tax thresholds over here. So if you're below 65, you only start paying pay as you earn once you earn more than 95,000 Rand per year. 65 to 75 is 150,000, above 75 is 165,000 Rand. So let me quickly show you what that would look like. So we've got the spreadsheet that we use at our office, and so this is a good example if somebody earns a fixed salary. So if your salary stays consistent all the way throughout the year, then this would be a nice way to formulate or to do the calculations. And there's many websites as well. These days we use one which is called Your Tax. So you go on there, then you put in your salary that you're going to earn for the month, and then that website then calculates the tax. But yes, just a brief breakdown. So if you're earning 5,000 Rand per year or per month, you can see annual salary is 60,000 Rand. So therefore there won't be any pay as you earn payable. UIF, remember, is 1% that you need to contribute or that you need to deduct from the employee, and the company must contribute 1% as well to that as well. So then you can see the total of the UIF that you would have to pay over for that employee as then 100 Rand. You can see pay as you earn. So you can see if you're earning 10,000 Rand, then remember then your annual salary is 120,000. So you can see then it's 363 Rand pay as you earn, 100 Rand for UIF that the employee contributes, 100 Rand that the company contributes. So then you can see total UIF is 200 Rand. So you would then pay 563 Rand 75 over to the receiver of revenue. I'm going to explain to you that process just now. And you can see then it increases. So if you earn 150,000 Rand for a month, you can see your income is 1.8 million. The tax for that month would then be work out 51,000 Rand. And you can see UIF stands still at 177 Rand 12. So with UIF it gets capped. So if you earn more than 17,712 Rand per month, you can't contribute more towards UIF than that amount. But STL is not the same. STL stays 1%. Doesn't matter what the amount is. We'll talk about that now as well quickly. So you can see that contribution then stands to that 354.24. So that's a 1% from the employee and 1% from the employer. So you can see that these total tax is then 51,000 plus the 354. So that is basically, if you're working with fixed salaries, if it doesn't change, then that is the way that you would do it. When you take variable salary, so that is normally the situation that most business owners would find themselves in, because this month, if there's no money in the account, you can't take a salary. Next month, if there's 100,000 Rand, you can probably take 90,000 Rand as a salary. So that is where the spreadsheet or monthly tax calculation is not accurate enough, because most of your payrolls, remember at the end of the year, the receiver of revenue is only interested in what you earn for the whole year. So if for 10 months you didn't take any salary, and then all of a sudden you take 100,000 Rand, it means that for the year you only took 200,000 Rand. So then if you had to work on this spreadsheet, then you can see that you would have over-deducted tax, because in 100 or 200,000 Rand, your tax liability for the year would probably be about 18,000 Rand. And then on this spreadsheet, they just want to deduct 22,000 Rand just for 1 month. So that is where payroll package works really, really well. So here's just an example, just an extract from one of my clients. You can see in March, he took 101,000 Rand, April 67, May again 109, and then it jumped down to 84, then 118 and 92. So if you had to put these tax calculations into a normal tax table, then you won't get to the same result, because the salary fluctuates. It goes up and down, and obviously payroll packages has other functionalities where you can work out medical tax credits if you belong to a medical age, retirement annuities, pension funds. So if you have any form of a complex salary structure, I would highly recommend you look at a payroll package. If it's only a fixed salary that you're paying your employees every single month, then there's something like a spreadsheet would be fine. At our office and on my YouTube channel, I've done some tutorials on vanilla payroll. So that's our payroll system of choice. They've got the really good, excellent pricing there. They're easy to use, and the support is also excellent. There's a South African payroll company, so it is one that's made for the South African employer. Yes, so that is the pay as you earn. So that is just an example of variable salaries. UIF. So let's quickly talk about UIF. So remember, with pay as you earn, they said 21 days. Within 21 days, you need to register as an employer. UIF rules are completely different. Remember, UIF is a completely different government department as well. So they say if somebody works for you longer than 24 hours in a month, and then you have to register for UIF. If you register for pay as you earn, it doesn't mean that you're automatically registered for UIF. Remember, the receiver of revenue and the Department of Labor are two separate government departments. They are not the same. So to register for UIF, you need to complete your forms, so UI18 and the UI19, and send it through to the Department of Labor. And then after that, you need to follow up for the registration. They also have a platform called U-Filing. If it works brilliantly. But at the moment, as I'm busy recording this video, we haven't been able to register an employer on that system probably since about February. So it's been about 6 months, 4 months that we haven't been able to use the system. So if it works brilliantly, then I can register as an employee within probably 3 minutes. I can get you registered, but at the moment it's down, so you need to complete the manual form, send it in, then follow up with the Department of Labor. So let's quickly see. There's another alternative as well, where you can get a company to register you for UIF, which is faster, but it is more expensive. So I have a handful of people that I outsource certain things to. So I've got a lady that doesn't want UIF registration. So if you want to use somebody to get you registered, then reach out to me, and then we can get you in touch. If you're registered for pay as you earn, then what will then happen is you pay the UIF over to the receiver of revenue with the pay as you earn every month. Then what the receiver of revenue does is they take the UIF portion, and they transfer the UIF portion over to the Department of Labor. So they collect the money on behalf of the Department of Labor. If you're not registered for pay as you earn, your company, and you're only registered for UIF, then you pay the Department of Labor directly. But just be careful, don't pay both. You can't pay the receiver of revenue and the Department of Labor. They're two separate ones. Yeah, so that's just really important. And then let's quickly see what else is there. You need to register on that U-Filing platform. If you can get registered, that's a brilliant system, because there you can upload to say who was the employees that worked for you on a monthly basis, what their salary was, what the amount of UIF was. So if for some reason at one stage you have to retrench somebody or fire somebody, they can go to the Department of Labor and everything is on their system already. So that's really, really important. Yeah, so my last bullet point, I said once employment ceases, your employee can then go claim benefits. Skills development levy. So the government has got the skills development system, which improves the skills of our nation. And so they say if your salary, the total payroll is more than 500,000 Rand per year, then you need to contribute 1% of your total salaries to skills development levy. And that system is exactly the same. You pay it over to the receiver of revenue together with the pay as you earn. They take that money and they pay it over to your skills development, or they call it CETAs, that the money goes through to them. So SARS in turn pays it over to the CETAs. So even if you don't pay STL, you must still register with CETAs. So there's a link, and then you can go check this one out. So if you just search for CETAs, and then you would be able to register your business for skills development levy. Workman compensation, I think this one is also very important. It's a bit of a weird system that they've got. So workman compensation is also known as COIDA, the Compensation for Occupational Injuries and Diseases Act. So this is for injuries on duty. You need to register with them separately as well. So although UIF is a government department, workman compensation is a different labor department, so they're not the same. They're the same department, but they're not the same. Both of them Department of Labor, but they don't talk to each other. So workman compensation are due once a year. And so the process that they work is they said that you need to make an estimate of what your salaries is going to be for the next 12 months. And based on that estimate that you give them, they can issue an invoice. And then once the financial year is finished, you need to let them know what the actual salaries was. So if your actual salaries was higher than the estimate, then you need to pay in the shortfall. If it was lower, you've got a credit on the system again. But at the same time, when you submit that year's return, you need to make an estimate for the following year again. So it's like this. You almost have to pay in advance for workman compensation. I personally think it's a brilliant system. I think the admin is just lacking a bit, and especially for people that get injured on duty, because I think over the years, since I've had my accounting practice since 2008, I think my clients probably used it about 4 or 5 times. So incidents happen. If people's in an accident, go to the hospital, give them the workman compensation number, and then their medical expenses are covered. So it's basically like a medical insurance from the government. So what's also important is you can apply for a letter of good standing. So I know quite often the people that is in the construction industry, they must have a letter of good standing from workman compensation before the guys are allowed to be on site. So it just protects the people, the construction company itself, or the people that's developing the place. If something happens to one of your subcontractors' employees, that they're not held liable for the medical expenses. Yeah, so if an employee gets injured on duty, then they can submit a claim with the Department of Labour. Yes, let's quickly touch on labour inspections. So this is something that we've seen over the years, probably since COVID, that has started happening on a more frequent basis. So some of my clients has probably been through about 2 or 3 labour inspections. If you do it the first time, make sure you keep all the documents right, and from there it should be a breeze. So you can see here's what they asked for. So they want a copy of the Act or the sectoral determination where applicable. So what that relates to is you get the Basic Condition of Employment Act. You get these big posters that you can order through Waltons or those places. So they say somewhere inside your shop, you need to have those posters up so that people can have access to the Basic Conditions of Employment Act. You need to have an attendance register or a time register for the past 2 months for at least 2 employees. So you obviously would have to keep it for all employees. You need to have signed employment contracts or written particulars of employment for all employees. Information about the remuneration, like the pay slips, the wage registers, overtime, leave pay for all employees for the last 2 months at least. And then the UIF registration number, as well as the proof of last payments, compensation, so the workman compensation registration plus the last proof of payments, a copy of your subsidy documents, a list of containing the names, gender, ID, passport numbers of all employees, and a company profile or basic particular of employee, which is a form that they will give you. Yes, so this is purely an admin thing, and we've seen now, like I said, some of my clients been through it for the second time. If you don't comply, then they give you fines. I think one of my clients got a fine now because they didn't have the poster up. So they fined them 300 Rand per employee that works for them for not having the poster up. So that's really, really important. Yes, and I think that's in a nutshell more on the compliance side of when you guys are employing someone. Like I said, the process itself, we will probably unpack that at a certain stage. There is some free material on my website as well where I talk to different people or onto my YouTube channel. And yes, but I just wanted to give you guys some information just about the technical side and about the compliance side of what you guys need to comply with when you are employing someone. I hope you guys enjoyed the video. Remember once again to give it a like. Remember to subscribe, and I'll see you guys for the next video.